Good morning, everybody. It's Chris from Mission Education with the 4 Majors News Update for the 16th of September 2013. Morning, guys. Hope you had a fantastic weekend with family and friends. This morning, looking at the euro against US dollars to start with on our FX8 Ultimate template. I'm just going to look at the weekly time frame just to give us an idea of what's been happening over the past week and what we could expect for this week in particular. Big picture, you can see since 2009, price has pretty much been moving between 2 points comfortably. The all-time low over here down at the 1200 mark, which happens to be a major support and resistance level. These blue lines over here are my monthly fibs, which is taking from the lowest low we've ever had to the highest high. You can see that price this year in particular, through January up to where we are now, it has been moving within a range. The institution moving average, previously also a resistance level. Near term, we're seeing a reattempt to that level just recently on last week's news, or last week's trading session. We saw a lot of positive upside and prices trading at the institution moving average as we speak, but also a price support and resistance level. You can see quite clearly if I just draw a horizontal line there very quickly. You'll notice that we had a attempt here back in May of this year and a reattempt through July, August of this year, and we're back here yet again. We had a breakout not too long ago in December. However, the failed pullback and then the continuation higher. We saw a bearish engulfing candle at a major support and resistance level in the shape of the institution. Price also reversed to the downside, and we saw a continued sell-off back to support, which was rough just under the monthly. So we had a breakout, the pullback, and the continuation failed to occur on these breakouts. Here we're back again at this level, so looking good. The actual indicator box is showing a lot of positiveness on this particular pair. The R squared, unfortunately, is looking slightly indecisive at the moment. We'd like to see this to be positive, so we know that the sentiment is genuine. But you can see quite clearly after last week's positive news outcome for the week has pushed price back up towards these prior resistance level highs. And if we stay up here, we can see a nice weekly close above this. We had a fail here about a month ago. Then if we do get that, we had a breakout, then we can expect a nice move to the upside, particularly back up towards these monthly highs that we saw back way back in 2011. In fact, we get above that, there's a good 760 odd pips long term for this particular pair. If we get above the institution, also a very strong sign. We had two prior attempts of the institution moving average on the weekly chart here back in 2011 September, another failed one here going into the 1st of January of this year. So if we get above it, that's definitely going to show some growth for the euro against US dollar long term. So we could actually act on that. So very important. We get a nice breakout. So going back to the daily now, straight away I get a buy signal on the daily. However, you look and see what's happening recently. We have a blue arrow, candles all blue. The institution's below price. In fact, all the moving averages below price, but the most important one, the institution's below price, and the RMO and the MACD are above zero. So a lot of positive. However, you can see quite clearly the close of last night on the Asian session. You can see quite clearly we had a spinning top, and that's at the current level highs that I took from my weekly. So trading into the weekly highs here, quite clearly, we want to see, ideally, we don't want to be trading an indecision candle. I'd like to see a nice break and close higher than this for this week. It'll be interesting. I'll just keep an eye on this. I'd like to see a nice breakout, the pullback over the next couple of days, and then a continuation. We had a breakout just recently, but we had a tweezer top, and subsequently led to the sell-off recently. We had a breakout, but we had a bearish engulfing candle also the same area. So I'm a bit apprehensive of taking any trades. We had a breakout, a gap on the start of the session last night. So rather, in my eyes, everything's looking good, fantastic. Everything's looking for a buy. It's just that I just want to get a clear break and close higher than this consolidation high on the weekly to see any further movement for the remainder of this week. Sterling, here again, looking at the weekly chart. Let me just pan out to the weekly just so you guys can see. Monthlies definitely below price. We're heading up. The good thing about this is we had prior resistance here also at the institution since February of this year. We had resistance breakout. We had another reattempt in May. We had a failed attempt in the middle part of July. However, prices have been pushing higher, and last week in particular we saw a lot of positiveness for the sterling against US dollar, breaking higher. Very bullish engulfing candle. In fact, very strong breakout. So we had a nice clear support here. You can see that we're getting a mixed reaction. Well, I mean, the long-term sentiment is still very much up. We're getting a bit of a consolidation intraday on our smaller time frames. You can see the MACD when we went through this consolidation period here. Just being patient. Price has ranged since March of this year, not really moving any lower, not moving any higher. but we've had a nice breakout just recently, and the MACD is confirming that. RMO is above the 0 line. Now, very, very strong punch higher. We're moving into the 78.6 fib level on our weekly. From the highs to the current low, you can see that the 61.8 was the prior resistance level. We've had a breakout for that. So we should be looking for buying opportunities for sterling against US dollar for the foreseeable future. If I just move down to my daily time frame, you can see a clear breakout on the daily. Failed resistance level here. We're above the institution moving average, and since we had a nice break above the institution moving average, we've moved higher. Here, breakout, pullback, but we had a failed continuation. Breakout, pullback, and then we have the continuation. And since then, our moving averages have been in order. The institution's below price. RMO has been gaining strength, and so has the MACD. So a nice breakout on Wednesday, the pullback on Thursday, and then the continuation on Friday. And subsequently, we're moving up into the 78.6 level, and where price is trading to that level is 66 odd pips and change. But clearly, on the Asian session last night, we had an indecision candle. So if you're looking to trade this up, guys, intraday, wait for consolidation break on your smaller time frames. You can quite clearly see that there is a resistance level high on the Asian session. There we go. If I move down to my hourly, you can quite clearly see that. So we want to see a nice clear break above that level. And if you look at the intermediate trend, higher, swing lower, swing higher, swing high, look for a nice breakout in and around this area. So sometime this morning, if we can see a nice bullish engulfing candle close higher on the hourly above this consolidation high since the Asian session at 1597 and change, look to see if we can target this last part here. But trade, be well aware that there's a lot more risk attached to this as we move into these highs. RMO is above, MACD has been above, just gone lower. However, there's still another 44 minutes to wait for the candle to close. See if there's any fundamental news this morning that could actually factor in sterling's price move against the US dollar. But as it stands at the moment now, if this is to continue to move higher, we want to see a break of this consolidation high we've seen right now at the 1595.77 mark. A nice bullish engulfing candle above that, and we might be able to capitalize on a short breakout continuation to the 78.6s sometime today, ideally this morning, as we head into the US session. If you look at the US dollar Swiss franc, you can see this particular pair, like its European counterpart, been consolidated for a long period of time. It's been trading within this range since the early parts of 2012. In fact, just recently here through to the last part of December 2012, right through to now, you can see quite an aggressive consolidation pattern here. The institution moving average on 2 occasions since the weekly, we saw attempts of breaking higher. However, on the pullback candles, we failed to see the actual pullback support and then the continuation higher. So we had a breakout, we had a pullback, but the pullback failed to actually find a support and then continuation higher. Here we had a breakout, pullback, which actually was a tweezer top. We failed to see this the prior week actually consolidating above here and then moving higher. So we had 3 valid attempts of the institution moving average, and on all 3 we had a failed breakout of that level. So still trading below the institution, which is still a negative signal. However, it's consolidating. It hasn't really fallen away from those attempts on each occasion. So telling us that the US buyer still wants to move high against the Swiss franc. So if we can hang on to the current support levels that's trading right now at the 22.6 and the 50, then we could see potentially another reattempt of the institution moving average shortly. Moving to our daily time frame, you can see the consolidation area around here. The institution moving average on a number of occasions has been where the monthly fib is. You can quite clearly see a failed attempt to break higher, failed attempt to break higher. We had a break higher just recently, but that failed to actually hang on to those levels, which formed a tweezer top at a resistance level, and prices falling aggressively to the downside. We are seeing consolidation as we speak at the moment now, but this is coming at the underside of the weekly fib. You can see on a number of occasions we've been below this level. Okay. However, we haven't seen price really kicking off once we've seen that. So with the breakout, the pullback, there has not been any continuation candles. Breakout, pullback, no continuation. Breakout, pullback, no strong continuation. We had a continuation candle here potentially, but if you look at how it finished, you can see that this candle didn't close lower than that. We did get RMO moving lower. The MACD was very flat. Not a lot of sentiment behind that move. And subsequently, if this was to be genuinely great, we're seeing selling, red arrow, red candles, below. So we disregard this one because it failed to close lower. So we look for the next candle to break below that. And what happened? It moved higher. So we had a tweezer bottom now at a support, breakout support, and subsequently we saw price moving higher. So there was another failed attempt to break lower. Here, breaking lower, red arrow, red candles, below. the institution in particular, below RMO, below the zero line, all looking positive for further negativity. However, we're seeing a consolidation now intraday, which is taking us back to the underside of the 23.6 weekly Fib retracement level. So that now will have to remain as a intraday resistance level. However, you can quickly see here we had a breakout consolidation here. So we want to see now price kicking lower, and then we could look at our prior lows down here where the yellow horizontal line is being mapped as our potential long-term target. That's 67 pips away. We look at the red arrow, red candles, institution 20 and 50 all below, above price, resisting price, below. So now you can see it's consolidative. We want to see a break lower. So we've got to wait for that bearish engulf and counter close lower, and subsequently then we could start targeting to the downside. The other scenario could be we could see price breaking back up against the weekly, so therefore consolidative, therefore rather stand aside and wait for confirmed move lower. We have seen swing lows, swing lows. So everything's looking negative intraday for the US dollar Swiss franc. We just need a clear break lower. We are consolidative under the 23.6 on the weekly, so we had the breakout, the pullback. Now we see a continuation candle on the 4 hour. We've got another 38 minutes to wait for this candle. Will it break the current support lows on this breakout to the downside? If we do get one that breaks lower, then look for target, look for entry, stop, and then look for that ultimate target down the bottom over here. Last pair of the day, US dollar, Japanese yen on the weekly. A lot of US dollar momentum through August 2012, right up to the current highs we saw in May of this year. However, since then, the US dollar has come unstuck and we've been ranging. The highs haven't really attempted the prior highs, so you can see that price has really been moving lower. And you can see we had a failure last week at a trend line, intermediate trend area. So we could see the US dollar being pushed back down towards our weekly fib here at the 23.6, which marries up with the 97.65 mark. So as it stands at the moment now, we are on a consolidation. RMO is still above the zero line. However, you can see the highs have been getting lower, which also reflected on price action. MACD is clearly below the zero line, and we can see that in the consolidation pullback here. So we move to our daily chart. You can see that price on a number of occasions attempted the monthly fib, and each breakout we failed to see a continuation. Breakout, failed, continuation. Breakout, failed, continuation. As there was no momentum or no true momentum behind that breakout, and subsequently price has fallen lower. And now it's testing the daily fib here at the 50% line. Consolidative, we had a red arrow, candle's gone red, but the daily hasn't closed yet. We've still got another long day ahead of us to wait for that. If we do get a punch lower and a close lower than the Friday close, then we could definitely look back towards the institution, which happens to be a prior target on 2 occasions previously. That which also marries up quite nicely with our 38.2 on our daily fib, as well as our 23.6 on our weekly fib, the red line. So we have a lot of potential targets here. If and when we see a bearish engulf and counter close and engulf the prior candle, and that would target roughly around 100 pips and change, take away your spread, you're still looking at a healthy return. So as it stands at the moment now, consolidative intraday. We want to see if further negativity just recently has seen the US dollar falling. We're still above the institution moving average on our 4 hour though. So as I mentioned, we want to see that breakout lower. If we do get that breakout lower on our 4 hour and our daily, that would engulf this consolidation here at the support, or the institution support on our 4 hour, which would then give us a true indication that price should be looking lower. The sentiment indicator looking very much negative intraday. We just need the R square to complement that. Below the zero line, MACD is still clearly below, and then we could look for that break and punch lower. So below the institution moving average on our 4 hour to our fib level down here, you're looking in excess of 90 odd pips and changes. So there's more than enough profit on this particular pair to see out for this week in particular. But we do need to see a clear close lower than the institution moving average. Okay guys, that was a short and sweet. That's the analysis for today and my intake for this week. Look and see if there's any fundamental news out today that's going to really reflect on price action, any sentiment. Not a hell of a lot out for the European market. We do have Draghi speaking this morning at 9 a.m. GMT, which is not too far away. We have CPI year-on-year figures for the euro, and we have core CPI year-on-year figures. So we have some news out this morning for euro, nothing for sterling, and straight into this afternoon at 1:30 p.m. GMT, we have CAD foreign security purchases, and then we have the US data, Empire State Manufacturing Index, which is quite an important one. We have the capacity utilization rate, and then we have the industrial production month-to-month figures, which they're expecting a slight A slight positive move to the upside was 0.0, flat, but not expecting growth of 0.5% to the upside. So if it comes out higher than that, we should see the US dollar rally. If it comes out lower, then we expect further consolidation for the US dollar against its cross pairs. Leave you with it. If you're using this template, please back it up with sound money management rules, guys. Very, very important. Keep it as simple as possible. Okay, I'm going to leave you with that. Have a fantastic trading day, and I'll see you first thing tomorrow morning. Until then, you guys trade serenely.